This is Scott Bauer on the floor of the CME Group, and we saw obviously quite a downdraft in the market today, but overall volume really wasn't that extended for the kind of move that we've seen. And what's going on here? Is it the economy or is it geopolitical events causing the downdraft here, causing the sell-off here, and causing what we're seeing as a flight to quality, right? Flight to quality meaning buying gold, buying bonds. That's why we're seeing interest rates down, hovering around the lows that we saw back just prior to the election, especially with the 10-year being at around 210 right now. Now, S&P market, S&P is hovering right now right back again at that 50-day moving average right around 2452. We've seen this book. We've read this story often over the last few months. In fact, just over the last few months since late spring, we've seen the market, the S&P market, actually dip down below that 50-day moving average multiple times just for it to kind of hover around and kick back up here. So again, this all circles back to, is this an economic event? Which it doesn't appear to be, because all signs from the economy seem to be pretty good. Or is it more likely just this geopolitical event with what's going on with North Korea right now? And is that going to abate over the next couple days? Is it going to get worse? We don't know. But that 2450, 2452 market in the S&P is really key to look at, is that's the 50-day moving average here. Now, in the E-mini complex, in the option complex here, Friday's trade, the last trading day before today, not a lot of volume, but open interest, overall future and option open interest is huge going into next week's quarterly expiration. Okay, on the 15th, next Friday, it's one of the main expirations of the year, and we're seeing very, very high open interest. Something very unusual. On Friday, we saw an opening position, a buyer in the E-mini March 1500 puts, way down below the marketplace. That's an opening position, maybe something to watch out for, maybe someone, just hedging a position, but definitely came up on the radar. Additionally, we saw very heavy volume also in the 2180 and 2165 strike puts, those of which expire next Friday on that major quarterly expiration. With vol up about 30% today, volatility that is, we're seeing obviously option prices get more expensive. So what happens is, between now and this Friday, September 8th, the expected move that the S&P E-mini options are showing us is about an $18 move. Ordinarily, if vol was trading where it was, last week or most of the summer, we'd see that move being somewhere in the $13, $14 range between now and the end of the week. But because of this extended volatility we're seeing now, that expected move is up to $18. This is Scott Bauer on the floor of the CME Group.